Hello and welcome to another update video about FETCH.AI FET. On this chart, which is one of the most popular cryptocurrencies here that we cover, we can see that the market is still dancing above the red line there on our long-term chart. Question might be, what is this red line actually? The red line is you could say it's not really an invalidation line, but it is the line below which probabilities will start to shift, and they will start to shift towards the yellow scenario from what would be a bullish scenario highlighted in white, which is, however, not super high confidence. We talked about it. The chart is weak for various reasons that I don't want to talk too much about. But yeah, probabilities will start to shift from a bullish scenario in white to a bearish scenario in yellow. So 52 cents is basically therefore the main level that helps us distinguish between the yellow scenario, which is bearish, and the white scenario, which is bullish. The main problem we have on this chart is that the move to the upside from the November 2022 low is a so-called diagonal pattern. Now, as you know, we are taking a look at the charts from an Elliott wave perspective. And an Elliott wave perspective tells us that we can really not trust diagonal structures. Diagonals are structures that consist of corrective wave patterns, and corrective wave patterns often change, they are unreliable, so we have to pay close attention and be extra cautious when we're dealing with a chart like that. The problem is also that this move to the upside, which formed the price top in March 2024, it wasn't really long enough for a very clear and reliable third wave in the white scenario. Normally, we want to see that a third wave reaches the 138% Fibonacci extension at $4.85. Now, the price didn't quite get there. That doesn't mean the third wave is invalidated, but it means that it's less reliable. So a lot of problems, and then you can see the price has been dancing around this support area for quite some time and hasn't really been able to move away from the support area. And we've even now broken below the August low, which is weak. That really is weak. It's one of the weaker charts at the moment. The long-term chart doesn't look too bad, but there are a lot of small issues with it, which means that I don't really trust this chart. It just means that you have to be careful. Any sustained break below the 52 cent level means that the white scenario will become far less likely. It will not invalidate the white scenario, but it will make it far less likely. In this scenario, then I would follow primarily the yellow scenario, which is to the downside into this area between possibly 3.5 cents to 20 cents, even though I don't suggest it will go down all the way to 3.5 cents, but I can't rule it out. That's the matter with cryptocurrencies and altcoin charts. They often form price tops in three waves. The yellow scenario suggests a large ABC structure, and the C wave down might have already begun. Unfortunately, we cannot really confirm it until the price breaks below 52 cents. Now let's take a look at the shorter time frame. Here we can see a possible reversal attempt to the upside from the Monday low. You remember the sell-off on Monday? A lot of coins saw that sell-off, experienced a strong decline. The recovery was profound, but we're still way below the last swing high. And the recovery is not clearly in a 5-wave pattern. And the pullback here could be wave 2 in the white scenario. That is, from a bullish point of view. I'm using this wave count to show you what the support area is. These are simply levels that we can observe. I'm not telling you it's turning around here. It's too early for that. I need to see a break above the signal line for a more solid confirmation that a low has been established on Monday. This is for now just a support area to watch. I mean, if you believe we're turning around, there you have some clear levels to watch. The invalidation point is, of course, the Monday low. That means any break below 65 cents, below support, would strongly indicate the price is going to test the 52 cent level, which is main support. And it takes a break. It takes a break above the 82 cent level, roughly 83 cents, the B wave high of this decline, to indicate that the market is planning a recovery and trying to start a third wave rally. So short term, it seems like as long as the price stays below 83 cents, that the near-term pressure is downward. That's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.